Welcome back, everyone. Tech Tune-Up. I'm your host, Paul Meeks. I am complimented here behind the scenes with Aaron Thomas of Benzinga. Those folks are in the Motor City. I'm here in the Bayou in Charleston, South Carolina. The date, in case you're keeping score, February 18, 2025. Remember, our whole MO is to go through some interesting stock tells, then lead into our list of buys for fresh money tech portfolios, and then talk about some of the overriding tech trends. So without further ado, let's get right at the tech stock news of the week. I want to start with XAI, which of course is Elon Musk's competitor in a bitter dispute with Sam Altman and OpenAI. But XAI purportedly has introduced its third version of its Grok model. It'll be interesting to see what happens, particularly with the relationship between Elon Musk and President Donald Trump in this battle, which seems to be heating up between XAI and OpenAI. You may recall one of the things that I believe as we go through this space is that the open source models, like Lambda by Meta, may actually, in the end, have the advantage over the closed proprietary models. That's one of the reasons why the AI lab in China, DeepSeek, has gotten so much press and, frankly, so much traction because another open sourced model. So we'll see. In the meantime, your buddy Musk has a $97 billion outstanding hostile takeover of the non-profit entity, which controls the for-profit segment of OpenAI. We'll see what that happens. So next, I want to talk about DeepSeek. This is the OpenAI model from that small lab in China. I think it's very interesting. It did cause a scare with the AI infrastructure trade here in the US about a week or so ago, since subsided somewhat because the major hyperscalers have not only reiterated their CapEx budgets for 25, on average, they increased them by about 16%. But here is something interesting. There have been a slew of announcements from credible players, let's call them the tech titans of China, that they are going to be integrating, going to be using DeepSeek's models. And so they must be at least somewhat legit if they're going to attract the likes of Baidu and Tencent and JD.com and Alibaba. So we'll see. I've always believed that some of that announcement from DeepSeek was hype, but they did have a fairly elegant technology, which hopefully we can copy and lever in the United States. Over time, yes, it probably does. Not in 25, not in 26, but over time, it probably does drastically reduce the cost of AI infrastructure. Next, I want to talk about AppLovin. This company has reported since we last got together. It was on my watch list. It's been on my buy list in the past. Here's the bottom line. I was so taken with the company's quarter, and particularly with the news that they're divesting their lower margin apps business and going all in on the very high margin advertising business, that I would buy AppLovin. But what I'd like to do is see it at least retreat back to $500 a share before I do so. But this is a major announcement for boosting profitability. And also, they're going to go, I think, over time into far more verticals. In the past, they came to the dance as in support of video games on mobile phones. I think now more verticals, bigger revenue opportunity. And they get rid of a 19% EBITDA margin business in apps and go all in on about a 70% EBITDA margin in advertising. So the next thing is Snowflake. Now, Snowflake does not report until February 26. So as you know, my style is, unless I know exactly what a company is going to report, And typically, if a talking head on television tells you they know that, they should go to jail for insider trading. So sometimes I just have more confidence than other times, but never 100% certainty. Nobody does. If they say that on there, they're bullshitting you. So on February 26th, Snowflake reports this had been on my buy list a couple of years ago, had been off it. The company had a really bad year last year, but now I'm actually warming up to the name. So stay tuned. Right now, if you go to my color scheme, it's going to be a yellow. Wait, it's in the bullpen. We'll see what happens when they announce their quarter and give their guide next week. I think that TikTok is very interesting. TikTok, as you know, we're going back and forth. And of course, Trump, Musk, et al. Are involved in this. And we'll see within the deadline by Congress passing of the legislation several years ago that you will have to divest TikTok, your US business. We'll see if that happens. I'm still expecting TikTok to merge or announce some kind of partnership that is going to allow it to survive in the United States because it's going to do a deal with the US company. Is it Elon Musk? Is it Larry Ellison over at Oracle? Who knows, but I'm still betting on that outcome. Next, ARM. This is interesting. ARM is best known for its licensing model of semiconductor cores that are quite often, frankly, found in industrial applications. But they've announced that they're going to spread their wings and they're going to go from essentially licensing their intellectual property, which is usually in something we call a chiplet, to actually designing the whole enchilada. Doesn't mean that they will build semiconductor fabs and actually manufacture chips, but going from licensing IP to being a designer of the entire chip and maybe ultimately the entire system is a big step up and a worthy announcement in technology. Who does it hurt if they're successful in this venture? Probably Marvell and Broadcom, which are stocks that have been on my list. And in sympathy, they have come down on this news. But I will tell you this, I've been covering tech essentially 24/7, 365 since the early 90s. An announcement is one thing. What they're proposing is going to be very difficult over at ARM to execute. So TBD, you're on alert, but let's not throw in the towel yet on Broadcom and Marvell. Next is Dell. This has been an on and off again bet that I've made in AI servers that find their way into data centers. For many years when it was doing well, I was a big fan of Supermicro, but then I threw in the towel with their latest accounting scandal. I'll get to that in a second. But Dell has announced it will sell $5 billion worth of servers to XAI, Musk's company. However, XAI is in the midst of a fundraise. So they have to raise the capital first, then they can buy the servers. But anyway, if it does come through, obviously that's a feather in the cap over at Dell, something to watch. Now, Supermicro is actually the best performing stock today in the NASDAQ 100. This stock had given up the ghost. It has come back. I listened to the conference call live last week, and even though the company fairly dramatically lowered their revenue guidance for this year, their CEO, founder, Charles Liang, said that he sees kind of a cryptic message, but he was pretty clear. He sees $40 billion revenue next year. Now, to put that in perspective, that would be about 70% up from the revenues that they should report this year. Now, I will tell you that is very exciting. The stock is up, but first of all, I want to see a couple of things happen. A week from today, February 25, they are due to report all of their revised financials from the accounting scandal. So let's wait and see how much of their results in the rearview mirror have to be restated. They claim not much, but we'll see. And then the other thing is, I kind of believe Charles Liang about as far as I can throw him. You know, here's a guy, right? Obviously a visionary, been in charge of the company since its founding in the early 90s. However, he's been embroiled in not one, but two accounting scandals. The first one led to a delisting from the stock exchange. The second one is ongoing, and it looks like if they get their financials out in a week's time, they might avoid a delisting. But, I mean, this is not a reputable company by any stretch. So hold the phone. A, let's get through the accounting scandal, get some visibility in how bad things have been. And B, let's try to get some evidence, some concrete evidence that we really do have 40 billion in revenue next year, because that is a pretty big stretch. And you know what? Even after this big move off the bottom, if that looks like it's a legit revenue number next year for SMCI, the stock is still cheap here today, even though it's up big. Next, Binance is interesting. As I mentioned last week, it looks like the Trump administration is taking a hands-off approach on this cryptocurrency company. Now, Binance is no longer headquartered in China. It had been, but it was founded and is run by the Chinese, even though they've always moved their headquarters one step to stay ahead of the regulators. But this is a big announcement and a real slap on the back for crypto worldwide if the Trump administration is going to call off the regulatory dogs, even on a Chinese crypto company. So we'll see. Next, we have Hewlett-Packard Enterprises, again, watching very carefully. We have in AI data servers, HPE, Dell, and SMCI. So let's see what happens. I gotta think that the business is good because the capital expenditure plans for the hyperscalers continues to be strong and rising. And also, HPE says they're already shipping Blackwell systems. Blackwell is the Nvidia chip. That would be great for Blackwell, our biggest position. But I still think with the manufacturing ramp at Nvidia, you still could have some manufacturing glitches, even though this company is super well run, that occur with this ramp to the Blackwell chip in the first half of this fiscal year. So expect it. You might have some opportunities on a dip, on any kind of a whiff of a negative announcement, which will be supply related. It won't be demand related, to buy Nvidia lower. And if that's the case, it's not a demand issue, it's a temporary supply issue. Then when Nvidia dips, you buy it back with both hands. So that's the way I look at Nvidia. Coming up are a couple of interesting stocks that I'm going to be looking for. Their quarterly reports next week. We have Arista Networks, which has been on my list. I thought it was getting a little expensive, so I sold it a while ago. And also Cadence Design Systems. And also another stock next week that I have on my watch list to potentially buy is Booking.com. So those three companies, Arista Networks is a data networking company to the AI All-Stars. So that's really important. Cadence, not so much, but kind of a soft tell. And Booking.com is a stock I'm very interested in because among the online travel agencies or the OTAs, this is the cream of the crop. And so far, their key competitor, Expedia, announced a really good quarter and gave great guidance. And I expect more from, or the same from, Booking. So we'll see. The last thing, man, this is really big news. We have a purported takeover and split up of Intel, where Taiwan Semiconductor would take their manufacturing business and Broadcom would take their chip design and marketing business. Here's what I think. If you care about Intel, you want this deal to happen because they cannot make it on their own. And if they can sell their manufacturing business to TSMC, the best manufacturer on the planet, and particularly if they can draw more manufacturing from Taiwan to the USA, that would be awesome. Awesome for probably America, awesome for Intel. I don't think it's that great for TSMC. Why would they do this? The only reason they would agree to this if you gave them unbelievable incentives to do business here, because they don't need Intel. Intel is garbage, but Intel needs them. On the other side, this is interesting. So Broadcom is a combo of a semiconductor company, though it doesn't work in the microprocessor business, which is the focus of Intel. And then the other piece of Broadcom is a software company. So there's not really that close of a fit. And you know what has made Broadcom so successful over time? And the reason I like the stock is they are awesome investment bankers. Their CEO, Hock Tan, buys US brands, fires everybody in sight, and squeezes even more juice out of the orange. So if this happens with Intel, you can expect Intel to fire everybody, not a little, everybody, because that's what Broadcom does when they make acquisitions. They are absolutely ruthless. Great for their shareholders, but this would be really nasty for Intel. And maybe mass firings at that company is what the doctor ordered. But here's the interesting bit. Of course, on this rumor, Intel stock is way up, right? This is a lifesaver. Taiwan Semi actually down a little bit, and Broadcom down quite significantly. So the market is telling you, great for Intel, actually shitty for these other two companies, so why bother? I actually own Taiwan Semi and Broadcom, and I would prefer, since I own those stocks and I'd rather short Intel, that I don't want this deal to happen. And don't you think that the management of Taiwan Semi and the management of Broadcom leaked this rumor to the markets themselves to see how Wall Street would act to their stock prices? And Wall Street has spoken. They don't like it. The stocks are down. And so I think they're going to take this as a tell that we are not going to do this unless the US government and the Trump administration give us the concessions of all concessions. So we'll see what happens there. Very exciting. Now let's get to my stock picks. Not much movement on my list this week. As always, green are fresh money buys. Yellow are on my watch and see. Sometimes I call them the bullpen. Red is a stock in which I've thrown in the towel. So I would take a look at a couple of changes. PayPal, I gave up on. I thought they were going to come back from the dead. No, thank you. I'm out. Fintech is a very tough business, and we'll see what happens. I actually think probably the most exciting thing that's going on, even though I'm not a fan of Elon Musk, at least the way he runs Tesla, is if his XAI can become the everything app, just like WhatsApp and some of these other apps, particularly in China, have become, man, that could be the one fintech app. And if anybody's going to do it, it's probably Elon Musk. I'm not that bullish on PayPal. But take a look at some of these names. You know, Taiwan Semi, I'm waiting. Google, I was a little bit downbeat after their most recent quarter, waiting on that. I told you my guidance on App11. Man, you get to $500 handle again, you buy it. CrowdStrike, waiting for their next report. I told you Spotify, I was very much impressed with when they reported last week or so, but I'm waiting for it to dip. Deckers has been a absolute fiasco, and they are going to be hurt with their Hoka brand, where they're seeing some discounting. And also, of course, all these US retailers are going to be bit in the ass by tariffs. But remember, I only recommended this very recently when it already hopefully absorbed most of the downward blow. And so we see Take-Two Interactive. You know, I'm looking to buy that. I'm very bullish on this fall's release of Grand Theft Auto 6, even though I'm not a gamer myself. Why would I be? I'm 60 years old. And I told you that if Expedia looks good as an online travel agency, I bet Booking looks even better. And so I'm really looking for those reports next week. We'll see what happens. But now let's delve into and finish up, before we get to your questions, so shoot them to us right now, the tech trends. Yeah, I'm a professor at the Citadel, which is a military college here in Charleston, South Carolina. And of course, I don't know if it's them, I don't know if it's their mom and dad, But yes, all of our students are going to be conservative. And about half of them are going to serve in the military. So that's no surprise. So yesterday in class, because I spend a lot of time with current events in class because I think it's important, one of my students said, Professor Meeks, why can't President Trump just tell Fed Chair Jay Powell to lower interest rates? Well, the battle between those two men is going to go on forever and ever. Ever since 1913, when the Fed was created by an act of Congress, they've had a dual mission, which they clarified only over time, is to get Americans to work and to slay the inflation beast. And they're focusing right now on the latter. I thought as recently as a few months ago, we'd have 4 interest rate cuts by the Fed in 2025. Now I bet, and the market is telling us through Fed funds futures contracts, that we're going to have 1. And there's probably little chance that the Fed is going to do anything with rates when they next meet on the 19th of March. So U.S. Treasury Secretary Scott Bessent, who's from Charleston, and President Donald Trump have said that they want to focus on getting the 10-year Treasury yield down. So focusing on intermediate term rates, because the 10-year is quite often the baseline rate for loans that you use to borrow for a house or a car, rather than battle the Fed on the shortest term rates. So maybe they can reach some compromise. But I've told you many times, I'm the tech investor that talks most about interest rates because, generally speaking, interest rates go up. And that would be because inflation is sticky high. Stock prices, particularly those of tech stocks, will inevitably go down. We are seeing some traction this week, and it goes even beyond Elon Musk's typical claims of some venture capital private equity investment in humanoid robots. So maybe it is a thing, and maybe it is going to be a thing faster than I originally thought. There is a company called Apptronic, and they are raising $350 million for humanoid robots. And one of the lead investors in this money raise is Alphabet, aka Google. So if you have their support, you might have some luck. So this is kind of interesting. Stay tuned. Maybe this is, once we build all this AI infrastructure, which has been a trade in favor of our semiconductor, server, and data center companies, that maybe the next great thing is humanoid robots powered by AI. Let's hope so, because we need a driver. This is very interesting. There is a French IT services company, kind of a consulting firm that most people don't know about. It's called Capgemini, and they had a really bad quarter. And they do have a global footprint. And so if IT services slow down for the French company Capgemini, there is something up, and it ain't good. So that's a tell that I'm looking for. The last thing I just wanted to mention, which isn't here on my list, but I should mention it, is there was a big to-do recently in China in which President Xi Jinping, who rarely makes appearances, actually came to a conference which was littered with all the tech Illuminati, all of the high-powered founders of companies like JD.com and Tencent and Alibaba. And so the tech companies got battered by the Chinese regulators over the past couple of years. But the fact that Xi Jinping comes to this event and is hobnobbing again with the Chinese tech executives and made public comments for his continued support and maybe increased support, this bodes well for Chinese tech and maybe a little ill for US tech. But we'll see. Now, let's see if you have any questions for me. Izzy asked me about Amazon. You know, Amazon's been a little weak since they reported, but among the Mag 7, I still only like 3, Amazon included, with Meta and Nvidia. Amazon's shock didn't really shock me, was that they lowered guidance for next quarter. And the reason they did that, I'm sure that there's some puts and takes in their business. There always is, right? They're a global franchise. But they are getting bit in the ass on the international side of the house by the appreciation of the US dollar versus other currencies. So I actually think Amazon is in pretty good shape. I don't and can't really worry too much about macroeconomic variables because Amazon cannot control that. But out of all the stocks that did poorly after they announced their results, and this is one of them, this is one of the few that I'm buying on weakness. Thank you for the question. PI has cratered. Is now the time to get in? I'd have to take another look, but I have followed the company for some time. I believe in what they're doing. I actually lived and worked not too far from their headquarters years ago. Used to visit the company frequently, but let me take a look. You know, guys, I'm super easy to find, whether it's through Benzinga or my firm behind me, Harvest Portfolio Management, or LinkedIn or whatever. I'm going to look into that because I would like to see maybe if it's a potential investment, even for my book. So anyway, I'll come back to you. A company I once admired, I have to figure out if their recent problem is that a temporary in nature or secular in nature. If it's temporary, you swoop in. If you see it's a secular problem, even zero might be too high for that company. Let me do some homework. What about SYM? I don't have a comment on SYM, sorry. Cybersecurity seems to be peaking. Is it a Palo Alto Networks event or CrowdStrike, or is there room for both? I think Palo Alto Networks has some specific issues. I think CrowdStrike, when they report, I actually think that they report next week, will be in better shape. Cybersecurity is important. I don't want to own all of them. CrowdStrike has always been my favorite, but I stepped aside when they were sued by Delta Airlines, as you may recall. And unfortunately, Delta only sued them last November. And so this could be rolling through the courts for years. But in the meantime, it seems like their business is pretty strong. I prefer CrowdStrike, but I want to get a legal update because I know their fundamentals are going to be fine when they report. I want to get a legal update on this suit against Delta Airlines. Is there a play on driverless taxis for Amazon? How much of a competitor can they be to Google and Tesla? Yeah, I think Amazon over time will be a player. I do think whether it's Waymo within Google or Tesla, that sooner or later, to really gain traction, they're going to have to forge partnerships with Uber and or Lyft. But if I was to stack these three companies you have here, I'm most confident in Waymo. Then would come Tesla, despite all of Elon Musk's positive rhetoric, and then Amazon. I think Amazon's going to be a player too. Which tech company is the most vulnerable to direct and or indirect impacts from tariffs? I would say the hardware companies most directly impacted, and unfortunately, or fortunately, depending if you're in or out of the stock, Apple should have a negative impact, right? You think about Apple does a lot of business in China, and Apple does a lot of manufacturing in China. And you saw that in last quarter's results, their business was way down in the what they call the Greater China region, which obviously includes China and some other bits. So out of the marquee names, I worry most about the impact on Apple shares. Nice. Follow this name. Yeah, I used to follow Nice. It's an admirable company. I haven't taken a quick look at it in a while, but I'll do that for you. I've owned the stock off and on for years. I think they're actually pretty well positioned. So I have PI and Nice to follow up on, and I will do that. I'll at least talk about them on our next show. All right, guys, that's all the time we have for. I love sharing my thoughts with you. Please come back to me, reach out. I talk to a couple of folks from time to time that watch this program. Make sure that you follow Benzinga. They got some awesome tools. I use them to invest my own portfolio. And definitely subscribe, like this particular broadcast. And we'll see you next week.